I'm now joined by Eric Fishwick, the head of economic research at CLSA, and also been named the region's top economist by Asia Money for 2009. Thank you for joining me, Mr. Fishwick. If I can ask you first of all, the Bank of England governor overnight talked about uncomfortably high inflation in the UK. Those two words, uncomfortably high, could be addressed to every single country, particularly in Asia. How does Indonesia fit into that bracket?
Well, these are global pressures. They are the result of global forces. The US is setting monetary policy according to its weak economy, and the rest of the world simply doesn't need that. The first step, therefore, for strong economies, most of those in Asia, is to start to decouple their policy from that of the US. That means two things: stronger currencies and higher interest rates.
So for Indonesia, many economists are today forecasting no change to rates. Is that the right move, do you think, or should they be more proactive, perhaps, and be more aggressive and raise rates?
I think they should be more proactive, but I think that the consensus view in this case is going to be correct. They won't tighten. They're relying on currency strength. The rupiah was very strong a year ago, and it's the lagged effect of that strength that is suppressing inflation today. The problem is when we look at the second half of 2010, the currency appreciation rate slowed down. So the effect of currency gains to keep inflation low will get weaker into the end of this year, not stronger. They need to raise interest rates to combat that.
I believe you're in Singapore for the CLSA Singapore Forum again. What are the words and the talks amongst those your peers you're hearing? What is the major concern? Is it just inflation, or is it that decoupling word you used about the US?
Well, we have actually started to see fund managers and investors refocusing on some Asian growth themes. My concern as an analyst is that I think that that is based on the expectation that inflation drops away quite quickly. And because it's driven by global forces, because it's now deeply rooted in the global economy, I don't think that expectation is justified. So I think we're seeing an ebb in inflation concerns, driven by the feeling that China is at or close to the peak. My worry is that those inflation concerns come back in the second half of the year.
Let's talk about the decoupling you mentioned before. Now, if the US, so far, Ben Bernanke has been quite clear, there will be no quantitative easing Mark III. Nevertheless, there obviously could be, because the debt ceiling limit is, I believe, days away from being reached and therefore even broken through. If quantitative easing Mark III were to happen, what would be the impact, Eric, on the Asian story as regards inflation? How damaging would it be?
It's more of the same. We have Asian economies, emerging commodity producers, Australasia, the core of Europe, all of which are now economies that have closed their output gap and are performing strongly. It's only the UK, the US and the periphery of Europe that really needs interest rates set at crisis levels. If the Fed were to ease further, and it's not just the debt ceiling, growth in the US has now dropped below the 2.5% figure that Bernanke has quoted as saying is necessary to stabilise the labour market, then that disconnect between the ease of borrowing the world's reserve currency and the global growth environment gets more extreme, and inflation is the symptom of that disconnect.
Thanks for joining me there. Eric Fishwick, the head of economic research at CLSA, attending his forum in Singapore. Many thanks for that. Wise words indeed, particularly on that US decoupling story.